Hello everybody, my name is Yaman and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down today. Dow Jones is down 0.2%. Russell 2000 is down 0.7%. Nvidia is up 2.2%. And Tesla is down 2%. Financials are generally down. Healthcare is up. So it's a defensive type of day. Microsoft and Apple are pretty flat. Crude oil is down to 62 handle. A yield curve is pretty much unchanged. 10-year treasury yield is at 4.13. S&P 500 Nasdaq slip as U.S. government shutdown looms. The S&P 500 and Nasdaq edged lower on Tuesday, the final day of the third quarter, on worries that a looming U.S. government shutdown could jeopardize the timely release of economic data. Sentiment turned risk-averse at a day after equities posted gains, underscoring how sensitive investors still are to any sign of uncertainty. While previous shutdowns have had a limited impact on markets, some analysts warn the current episode could be more disruptive given the economic backdrop is delicate. I don't think it will be disruptive for the market in the long term. However, it does inject more uncertainty in monetary policy and fiscal policy, said Eric Thiel, Chief Investment Officer at Comerica Wealth Management. Communication services stocks on the S&P 500 fell 1%, dragged by losses in Meta and Alphabet, which fell 2% and 1.4% respectively. Consumer discretionary shares lost 1% on the S&P 500, while energy declined 1.1%, technology added 0.3%. A rise in healthcare stocks limited losses on the Dow. A Labor Department report showed job openings rose to 7.23 million in August, compared with 7.19 million estimated by the economists. But if you look at it on a 3-month average, I think this is the lowest cycle low. Another data point showed U.S. consumer confidence declined more than expected in September. We're going to dig into all of this data as well. Meanwhile, Fed Vice Chair Philip Jefferson warned the job market could face stress without central bank support, while Boston Fed President Susan Collins said she's open to additional rate cuts. Traders will also look to a busy slate of Fed speakers for direction as they speak later in the day. Equities have held up well through the third quarter, with the benchmark S&P 500, the tech-heavy Nasdaq, and the blue-chip Dow Jones Industrial Average all set to notch gains for the second straight quarter. The benchmark S&P 500 is on track for its best third-quarter performance since 2020. Chipmaker Wolfspeed surged 36% a day after exiting bankruptcy. Firefly Aerospace dropped 25% after a testing mishap destroyed the core booster for Centerpiece Alpha rocket. Paychex fell 6% to the bottom of the benchmark index after the HR platform reported its quarterly results. Lamb Weston rose 8%, topping the S&P 500 after the frozen potato products maker beat analyst estimates for the first quarter revenue and profit. Let's switch to politics. Vance says U.S. headed to a shutdown after meeting with Democrats. U.S. President Donald Trump and his Democratic opponents appear to make little progress at the White House meeting aimed at heading off a government shutdown that could disrupt a wide range of services as soon as Wednesday. Both sides emerged from the meeting saying the other would be at fault if Congress fails to extend government funding beyond the Tuesday midnight deadline. I think we're headed to a shutdown, Vice President J.D. Vance said. Democrats say any agreement to extend that deadline must also preserve expiring health benefits, while Trump's Republicans insist health and government funding must be dealt with as separate issues. Chuck Schumer said two sides have very large differences. If Congress does not act, thousands of federal government workers could be furloughed, from NASA to the national parks, and a wide range of services would be disrupted. Federal courts might have to close, and grants for small businesses could be delayed. Budget standoffs have become relatively routine in Washington over the past 15 years and are often resolved at the last minute. But Trump's willingness to override or ignore spending laws passed by Congress has injected a new dimension of uncertainty. Trump has refused to spend billions of dollars approved by Congress and is threatened to extend his purge of the federal workforce if Congress allows the government to shut down. Only a handful of agencies have so far published plans detailing how they would proceed in the event of a shutdown. The White House released an executive order Monday evening extending the life of more than 20 federal advisory committees through 2027. It remains unclear how these committees, which advise the president in areas including trade and national security, will be funded amid ongoing shutdown uncertainty. At issue is $1.7 trillion in discretionary spending that funds agency operations, which amounts to roughly one quarter of the government's total $7 trillion budget. Much of the remainder goes to health and retirement programs and interest payments on the growing $37.5 trillion debt. Prior to White House meeting, Democrats floated a plan that would extend current funding for 7 to 10 days, according to Democratic sources, which could buy time to hammer out a more permanent agreement. That is shorter than the timeline backed by Republicans, which would extend funding to November 21. After returning to the Capitol, Schumer told reporters he would not accept a shorter funding bill. Senate Republican leader John Thune sought to pile pressure on Democrats by scheduling a Tuesday vote on a Republican bill, which has already failed once in the Senate. There have been 14 partial government shutdowns since 1981, most lasting just a few days. The most recent was also the longest, lasting 35 days in 2018 and 2019 due to a dispute over immigration during Trump's first term. This time, healthcare is at issue. Roughly 24 million Americans who get coverage through the Affordable Care Act will see their costs rise if Congress does not extend temporary tax breaks due to expire at the end of this year. House Democratic leader Hakeem Jeffries said Congress needs to make those tax breaks permanent now because higher health insurance premiums are being finalized and the new sign-up period starts November 1. We believe that simply accepting the Republican plan to continue to assault and gut healthcare is unacceptable, Jeffries said at a Monday press conference. Republicans say they are willing to consider the issue, but not as part of a temporary spending patch. They had some ideas that I actually thought were reasonable, and they had some ideas that the president thought was reasonable. What's not reasonable is to hold those ideas at leverage and shut down the government, Vance said. Democrats want to energize their voting base ahead of the 2026 midterm elections, when control of Congress will be at stake, and have broadly lined up behind the healthcare push. I think it's pretty obvious what's going to happen in the midterms. All right, switching back to Wall Street. Wall Street left in the dark on U.S. data if shutdown happens. Wall Street is preparing for disruption to economic data if a looming U.S. government shutdown goes ahead, which could cause investors to rely more on alternative data or take on more defensive positions as they anticipate volatility in asset prices. The U.S. Labor Department said on Monday that economic data releases would pause in a government shutdown, amplifying investor concerns that the Friday's monthly employment report would not be published as scheduled. Such a delay to the closer watch report could cause confusion for investors, including how to assess the Federal Reserve's upcoming interest rate decisions. A shutdown is an expected event, like the slow car crash that we're all watching happen, said Callie Cox, chief market strategist at Ritholtz Wealth Management. There are ways to hedge this, and I'm sure affected investors are already thinking about that. The Fed relies on a range of data, including regular government releases, to make monetary policy decisions as it seeks to balance its key economic goals of price stability and maximum employment. Markets are pricing in a quarter-point rate cut by the Fed at the next meeting. The central bank made such a cut earlier in September following weak employment reports. Let's dig into the jobs market. Frozen job market shows little sign of thawing. Job openings were roughly unchanged in August, while the hiring and quit rates declined. The labor market remained stagnant as job openings increased only slightly in August and hiring declined. Job openings totaled 7.23 million in August, according to data from BLS, released Tuesday, just a bit higher than the 7.21 million vacancies seen in July. The hiring rate also ticked lower last month, reaching its lowest point since June 2024, while the rate of people voluntarily leaving their jobs slid to its lowest level so far this year, underscoring a frozen labor market in which out-of-work Americans are struggling to gain footing. Quote, yikes. The official U.S. hiring rate fell to 3.2% in August. Heather Long, chief economist at Navy Federal Credit Union, wrote on X, calling the pace of hiring an anemic level that, apart from 1 month last year and another month in April 2020, hadn't been seen since the Great Recession. The job market is frozen, Long wrote. Americans feel stuck and it appears to be getting worse. Indeed, consumer sentiment about the state of the labor market has been souring, though the overall unemployment rate has remained relatively low at 4.3%. Still, even as the pace of job growth has slowed and unemployment has only risen slightly, the supply of labor is also softening as net immigration into the U.S., an important contributor to workforce growth, has dropped sharply, U.S. Federal Reserve Vice Chair Philip Jefferson said in a speech on Monday. A low level of job creation would historically put upward pressure on the unemployment rate, though so far that effect has been muted because of the decline in labor force growth, Jefferson said. Economists with the Economic Policy Institute similarly noted Tuesday that while recent data revisions have suggested the labor market was weaker than expected last year, much of the slower growth rate was the result of smaller working-age population growth due to reduced immigration and aging workforce, rather than there being fewer opportunities available. This year, though, there are some warning signs that the market is deteriorating. There has been a marked decline in payroll employment growth, averaging only 29,000 jobs per month since May, the economist said. Nominal wages are still rising faster than inflation, but the pace of private sector real wage growth is half as fast as it was 3 months ago. Meanwhile, layoffs remain low and regular state unemployment insurance claims aren't rising, but federal unemployment insurance claims are about twice as high as they were last year at this time, they added. U.S. consumer confidence weakens in September on labor market worries. U.S. consumer confidence declined more than expected in September amid mounting worries over the availability of jobs. The Conference Board said on Tuesday its consumer confidence index dropped by 3.6 points to 94.2 this month. Economists polled by Reuters had forecast the index dipping to 96. Consumers' assessment of business conditions was much less positive than in recent months, while their appraisal of current job availability fell for the 9th straight month to reach new multi-year low, said Stephanie Guichard, senior economist, global indicators at the Conference Board. This is consistent with decline in job openings. Fed's Collins may support more cuts in 2025 as rate debate intensifies. Boston Federal Reserve President Susan Collins said the cutting interest rates a bit more may be appropriate due to diminished threats of higher inflation and risks that unemployment could rise. It may be appropriate to ease the policy rate a bit further this year, but the data will have to show that, Collins said in a speech in New York at the Council of Foreign Relations. She added, I continue to see a modestly restrictive policy stance as appropriate as monetary policymakers work to restore price stability while limiting the risks of further labor market weakening. Collins wasn't the only Fed official on Tuesday to express new concerns about unemployment. The Fed's vice chair, Philip Jefferson, said he sees downside risks as well. We just talked about that one, so I'm going to skip that one. Jefferson stopped short of telegraphing further cuts, saying only that he would evaluate the level of rates based on incoming data and that he supported a 25 basis point rate cut at the Fed's last meeting on September 17. Miran has repealed the call for deeper cuts. Economy added just 22,000 jobs in August. Job growth for June was also revised into negative territory, while July showed below-trend growth. All right, nothing new there. Let's switch to company-specific news. CoreWeave stock surges as reported $14 billion Meta deal signals limitless AI demand. CoreWeave stock surge jumped more than 14% Tuesday after Bloomberg reported that the company has inked $14.2 billion deal with Meta. CoreWeave, the NVIDIA-backed AI data center operator, will provide Meta access to NVIDIA's GB300 server racks, which contains 72 of the chipmaker's Blackwell AI GPUs. Quote, they loved our infrastructure in the earlier contracts and came back for more, and CoreWeave's CEO told Bloomberg in an interview. CoreWeave and Meta did not immediately respond to Yahoo Finance's requests for comment. Meta has been spending at a torrid pace as it invests in AI infrastructure that includes a mammoth 4 million square foot data center in Louisiana. The Instagram parent raised its 2025 capital expansion guidance to a range between $66 billion and $72 billion in its most recent quarterly financial report. Tuesday's development comes on the heels of CoreWeave's $6.5 billion deal with OpenAI announced last week. The company is working to diversify its customer base away from Microsoft, which accounted for roughly 70% of the company's revenue in its most recent quarter. Quote, this is clearly a step in the right direction for diversification, Intrator told Bloomberg. Hedge Eye risk management analyst Felix Wang, who holds a short position on CoreWeave, called the deal a positive surprise. Tech analyst and Bouquet Capital Partners CIO Kimberly Forrest said the partnership was a good deal for both firms and is an indication that current demand for high-end AI chips is, quote, limitless. CoreWeave's latest partnership also comes amid a flurry of other recent AI deals as big tech rushes to add compute capacity in data centers to power their AI ambitions. Those deals include NVIDIA's $100 billion OpenAI investment announced last week and OpenAI's reported $300 billion contract with Oracle. Citi analysts forecast on Tuesday that AI capex from 2025 through 2029 would hit $2.8 trillion. CoreWeave has been a rising player in the AI build-out, as big tech firms have rented space in its data centers to access its large supply of NVIDIA chips while they're in the process of building their sites. CoreWeave went public in March in a rocky IPO that tested the AI trade. Some Wall Street analysts have fretted over the company's mounting debt borrowed at high interest rates, its deteriorating operating income outlook, and its risky business model, given that CoreWeave's heavily concentrated customer base consists of its own competitors. The fear is that once big tech firms finish building out their own data centers and obtain a sufficient supply of NVIDIA's chips, they will no longer need compute capacity from CoreWeave. Spotify stock drops after Daniel Ek says he'll step down as CEO in 2026. Spotify founder and CEO Daniel Ek will step down from his role at the helm of the streaming giant and transition to executive chairman effective January 1, 2026, the company announced early Tuesday. Shares dropped in the immediate aftermath of the news, falling over 4% in mid-morning trade. In his new position, Ek will focus on long-term strategy, capital allocation, and founder-led guidance. Gustav Söderström, Spotify's Chief Product and Technology Officer, and Alex Norström, Chief Business Officer, will assume co-CEO titles, the company said. Both have been nominated to join Spotify's board, pending shareholder approval. On an investor call following the announcement, Ek called the move a natural evolution and said Spotify is now in its strongest position yet. AI-fixated traders pile into Teradyne after obscure chip stocks. Chip stocks have become a favorite way to bet on AI, but after big run-ups in companies like Broadcom, investors are turning to an often overlooked group, suppliers of the gear used to make semiconductors. Teradyne, a provider of tools used for testing chips during the manufacturing process, has nearly doubled from an April low and is up more than 50% since late July. Meanwhile, Lam Research and KLA Corp, two of the biggest US makers of the machines used to produce semiconductors, are the fourth and fifth best performing stocks, respectively, in the 30-member Philadelphia Stock Exchange Semiconductor Index this year, with gains of more than 69%. You can see the graph on the screen. Earlier this month, Lam went on a 14-session rally, its longest winning streak on record, during which the shares soared 36%, and peer Applied Materials just posted its own 8-session streak that added 20%. With companies like Microsoft and Alphabet continuing to boost spending on AI, and the valuations of many chip makers looking increasingly expensive, equipment suppliers have become a destination for investors seeking growth at a more reasonable cost, although their valuations aren't as enticing as they were now that investors are starting to pile in. Let's switch to automotive. Measures that aim to close the cost gap at Bosch Mobility, further job cuts unavailable. This is, by the way, a press release by Bosch itself. It's pretty bleak. Bosch Mobility is facing a 2.5 billion euro annual cost gap due to challenging market conditions, including subdued vehicle market development, delayed adoption of new technologies, and shifting demand to regions outside of Europe. To address this, Bosch plans to implement cost reduction measures, including productivity gains, material cost reductions, and structural adjustments, resulting in an anticipated reduction of around 13,000 jobs primarily in Germany. The company aims to enhance competitiveness and secure its position in the global automotive industry. So layoffs, they announced layoffs. 13,000, mostly in Germany. In Asia, Chinese carmaker BYD cuts prices amid falling sales at home. Chinese electric vehicle maker BYD is offering discounts on several models, including the King Plus sedan, due to declining sales in China. This follows previous price cuts in May and September. So several price cuts this year. And this time, they're about $1,400. And Xpeng accelerates European rollout with 5-country market entry. Xpeng is expanding its European presence, launching in Switzerland through a partnership with Heading Group and entering Austria, Hungary, Slovenia, and Croatia. The company plans to open numerous sales outlets and services centers in these countries, leveraging local partnerships and pop-up stores to build brand awareness. This rollout marks a new phase of systemic growth for Xpeng in Europe. All right, on that note, thank you very much, everybody, and I will chat with you all next time. Take care.